It's Sunday, May 24th, 2026. Let's take a few minutes to review how the crypto market performed over the weekend and outline the main factors that could influence price action in the week ahead. How the weekend played out. Bitcoin traded in a fairly tight range this weekend, moving between $77,000 and $78,000. During early Monday hours in Asia, BTC slipped under $77,000, marking its third consecutive daily decline. Still, for the month of May, Bitcoin remains up about 11.8% after recovering to $78,272 earlier in the month. Three things shaped the weekend's price action. First, geopolitics. Reports of possible renewed US and Israel military action against Iran pushed oil prices higher and weighed on risk assets. Because crypto trades around the clock, Bitcoin reflected that sentiment while traditional markets were closed. Second, the move has been led by spot buying, not leverage. Options open interest was flat and put premiums fell 51% this month, which points to a healthier market structure but also less volatility. Third, Bitcoin dominance remains elevated, near 58 to 60%. That means capital is still concentrated in BTC. Ethereum lost momentum and dropped below a key trend line, with ETH/BTC posting its fourth straight loss. Across altcoins, performance was mixed. Near Protocol rose 8% on Friday, following a 13% gain on Thursday. Dogecoin recovered to above 10.5 cents as on-chain data showed whale wallets accumulating during the dip. Market sentiment, measured by the Fear and Greed Index, is currently at 28, which falls in the fear category. Where we stand technically. From a technical perspective, Bitcoin is trading between a rising 50-day moving average and a falling 200-day moving average. The two levels traders are watching closely are $82,500 as resistance and $76,000 as support. To confirm a shift in momentum, Bitcoin would need to reclaim the 200-day EMA around $81,458. A sustained move above $82,500 could bring in additional buyers. On the downside, a loss of $76,000 would open the door to the $65,000 to $69,000 area. Some analysts also note the possibility of a deeper move toward $50,000 before a new trend develops. Institutional and network context. Institutional flows continue to favor Bitcoin. ETF data this month shows stronger, more consistent inflows for BTC products, while Ethereum-related products have seen softer demand. That divergence helps explain Bitcoin's relative strength in May. On the network side, Bitcoin hash rate is down 13.2% from its November 2025 peak. This is the longest sustained drawdown in hash rate on record. Several US public miners have been reallocating capacity toward AI, which reduces potential selling pressure from miners over time. Key things to monitor next week. Looking ahead, there are a few catalysts to keep on the radar. On the macro front, G7 finance ministers meet May 18th to 19th, and any coordinated statements regarding Iran could influence risk sentiment. April CPI came in at 3.7% year-over-year. If inflation remains sticky, expectations for rate cuts could shift further out to September 2027, which would be a headwind for risk assets. On the regulatory and ETF side, a recent U.S. executive order fast-tracked Fed payment accounts for digital asset firms, and SBI filed for Japan's first spot XRP ETF. The market is still digesting these developments. Finally, watch for supply events. YZY is scheduled to unlock 4.46% of its circulating supply next week, equal to about $6.2 million. Unlocks in smaller cap assets can create short-term volatility. Closing thoughts. To summarize, Bitcoin held the $77,000 level over the weekend despite geopolitical pressure. The market structure shows spot-driven buying with low leverage, and overall sentiment remains cautious. Institutions continue to allocate more to Bitcoin than to Ethereum at the moment. We're currently in a consolidation phase. The next directional move will likely depend on a clear catalyst, whether that's macro developments, ETF-related news, or a technical breakout above $82,500 with strong volume. Conversely, a break below $76,000 would shift focus to lower support levels. That's the full picture for now. We'll see how these factors play out in the coming week.